Hello everyone, this is Teddy Keckstaff of Forex Trading Unlocked, and we are here with a daily Forex market analysis and live trading breakdown for you for March 29th, 2020. The markets are not open yet, so the live trading part will be a little bit different than normal. But real quick, we want to put up our disclaimer to remind you that this video is for illustrative purposes only and educational purposes. So please do not try and copy our trades. You don't know when we are altering the stops or adjusting them, getting in and out of them, what have you, unless you are part of the signal service where that's all executed through your own broker and through your own managed account that you have complete control over. But only our signal service people should be involved in watching those trades as far as trying to know what's going on with them. Otherwise, you just want to learn and watch how we manage them so you get some ideas on how to manage some of your own trades, perhaps. So with that being said, we want to speak of some patterns that we are going to be looking for. We're going to be looking for some high probable Japanese candlestick patterns. In fact, there's a book called also available on Amazon and Kindle and paperback version, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And with that, let's go to our live action screen as that jet screeches across the background. Isn't that nice? No, it's really not very many planes actually lately because of what's going on. All right, we have the Forex-Trading-Unlocked.com workstation page already pulled up as far as numbers coming up. Let's see, we have some minor ones in the UK, we have Swiss number, we have some German numbers, we definitely have some German numbers tomorrow. We also have some EU numbers, and we, let's see, some Japanese, so there's some good economic numbers coming out tomorrow, as well as we have GDP for the UK, and we have the unemployment for Germany. That'll be interesting to see how that goes. Then we have, for Canada, we have GDP and raw materials. We have we have consumer confidence. That'll be a big one for the US. And for Australia, let's see, building, it's not very much, but Japan, we definitely have some big numbers as well. So there's definitely some economic numbers that could rock the markets this week. We have retail sales for Germany also coming up. We have, let's see, we have also manufacturing PMI for the and the ISM for the U.S. We also have obviously unemployment claims, which will be pretty big. Let's see, that's on Thursday, so the initial jobless claims that we have for the U.S. We know that last week we had a record-breaking 3.2 something million, 3.3, almost 3 million jobless claims, biggest spike in weekly claims ever. We have durable goods also, factory orders coming out. These are big numbers that they're behind, they're lagging, but still, as long as they're strong, and we'll see how the next ones come out, then we can keep a trend. Hopefully the economy and people's the employment situation doesn't escalate as much as some of the pundits are pushing for. And then we have on Friday, which is, then we have, let's see, then we come all the way down. We have retail sales for the EU, big number. Then we have obviously the non-farm payrolls unemployment rate that we will have also on Friday. And also ISM manufacturing numbers also that come out on Friday. So when we talk about numbers, we're loaded up for the week. So we have the dollar index here that we have pulled up first with our chart. And as you'll notice, last week was quite the sell-off for the dollar index, and now it is in our target zone. So where does this mean that what does this mean from now? Is the dollar bear over? Is it going to get a bounce? Well, who knows? Right now, that's our target zone for a downside correction. So if the overall bull that has been the dollar index for, well, it's been actually kind of sideways if you really look at it for quite some time, but over the past few months, obviously, the past month and a half, we've had quite a bounce in the dollar index. We made these higher move highs. This was at the height of the scare so far for the coronavirus as the globe was mobilizing. Now the U.S. has passed a $2 trillion package. We'll see how the markets react to this. I think that they're positive, but there's still a lot of we haven't seen the biggest spikes yet. I think we have a little while, another week or two before we flatten out the curve, and hopefully that's all it is globally, especially in Europe and in the United States. Should this start to really escalate throughout the rest of the globe, that means we definitely are going to have another few months of this going around the globe, which is probably not going to bode well for global economies. Whether there's going to be another run for dollar bulls up to those highs, or if we're going to have a crashing dollar, who knows? Right now we have an amazing package that was just passed in the U.S. as far as how much money it's going to be flowing in and out of the economy. So we'll see. But right now we have the dollar index that has reached a downside corrective target zone. It has a little bit more that it could go yet. I wouldn't say that the markets don't tend to bottom in a day, so we could have a little grinding around in this area. If you look at it, this was kind of a big resistance area for the dollar that it broke out, and it looked like it was going to be a bull, and this was the part that collapsed. Remember when the dollar first was a big bear before we had this explosive 2-week rally? So there's been, just in the past month, look at the month of March. If you look at it, we're almost unchanged on the month. But look at this volatility. And let's see, we had the last day in February, we closed at 98,127, and right now we're at 98,306, 306 rather, for where we closed on Friday. So we're almost unchanged for the month of March. But look at this volatility. We have a low of 94.65 and a high of 102.93, almost 103. This is a big, crazy swing trade we've had in the dollar index. So with that, now that we know the dollar's under pressure, let's start looking at these markets. Why don't we? So we're looking for some buy and sell signals. We're looking to see if we're going to see anything. So let's see, US dollar TRY. All right, we're going to start out with the Turkish lira. Why? Well, because we had a sell signal in that market already last week. As you can see, we have a slight correction here. We're keying off the low from 2 sessions ago. We have a downside target zone. It's just a little bit lower here for us to go yet. Nothing major, but we definitely are bearish. So what does this mean? This kind of goes with the dollar index still prodding lows. So if we get another turn on support, especially if we take out this low here at 637.90, well, then I think we have a very good shot at getting back down into this lower area. And then probably see some strength, because overall I think the US dollar TRY is going to remain a very strong bull. Speaking of corrections and sell signals that we've had, we also had a nice little turn of events in the US dollar Mexican peso. So we have this little high that we put in here, higher move high. Look at this run up we've had just from the middle of February into the end of March. Just crazy run up from 18.5 pesos up to almost 26 pesos to the dollar. And now here we are. We're still correcting. We found a nice little base here on this 0.382 Fibonacci level. But I still think we have a little bit more to go. If the dollar is going to remain under pressure, I believe we probably have a good chance at getting down into this area. And then I think we have, if the dollar bulls are going to come back, well, then we have probably a range that's going to set up, because the peso had such a velocity with this rally here. You got to think that most likely if it's going to remain a bull, that we'll probably see some consolidation, and it may be a while of consolidation because these ranges have been out. Look at the difference in these days here, just in the beginning of the year in January versus every day since the middle of February. The peso, look at that. The trading ranges alone that just says it all right there. So yeah, we'll see how this pans out. We're looking for the dollar bears to still maybe press this correction, but maybe not. Maybe we're holding in right around this 0.382 level, and we'll get a run for new higher move highs. But right now, like I said, we have a downside target zone. If the dollar remains bearish, then most likely we'll see a little bit lower of a trade yet for that. Now we're here with the US dollar Canada. As you can see, look at this run up we've had. We still have this gap down here. That's why we have this double bubble situation here. So we have our first downside target right in this little area here. We have a little ways to go yet, not too much, but still very reachable within the next few sessions. And you got to think that markets typically go out like they come in, so this would have us a good basing area. Now, will we fill this gap down here? Eventually, I'm pretty sure we will. Will it happen anytime soon? Well, there's a whole nother question. I think you're going to find a lot of bullish support coming into this area, unless the dollar really becomes a bear, and then who knows? Maybe we're going to see another turn of event, and this market's going to get slammed, and we'll see this market back down at levels like it was just trading just a couple months ago. Remember, we went from, at the beginning of the year here, we ended on the 31st at $1.2975, and the market got as high as $1.4667. So that's quite the run up just in a few months. And look at just how we've even corrected back. What I just said to the high there, and now look at we're back at $1.3971. So for us to reach this little area here with the dollar index under pressure still, like I said, I could see the dollar index still testing support for a little bit, and that would lay the groundwork for still having a little bit more of a sell-off in these markets. So now let's go and look at the Australian dollar, US dollar, which is, oops, we don't want that. Sorry about that, folks. We got the AUDUSD we're pulling up. Okay, so this one we have a little upside corrective zone here. Look at how this market has fallen over. We were above 70 cents. We got to, what was this? The low was right around 56.59. That's crazy. So yeah, we still have a little bit of upside, potential here for this market. I think this one is going to be a tough one for the Australian dollar to remain a bull. The other markets, are they in a corrective phase or are they turning the dollar? That is still questionable. However, with this one, I really find it hard to believe that the Australian dollar will become a raging bull against the dollar anytime soon. I think that we're going to have a good opportunity to sell this market in this area as it probably ends up making another turn towards support. So we'll see. We'll see how this goes over the next few sessions. But right now we are not very bullish on that one. Now the New Zealand dollar, Australian dollar, excuse me, New Zealand dollar, Australian dollar. Let's get this right. New Zealand dollar, US dollar. Okay, this chart here is very similar to the Australian dollar, US dollar, but I have a little more faith in this one. I think that this one, especially even if the US dollar bull starts to come back, that this one still probably has a good chance at reaching this upside target area. That's probably about it. I think overall, this one, I don't see it becoming a bull. I see it being more of a neutral to lower trade over still the next few months. There's still a lot of things to see on how the numbers with the coronavirus are shaping up down there. As long as they stay very flat to going lower, then I think this market has a very good potential to be neutral to pushing a little bit higher, but grinding. I don't think it's going to go back to that bull that it was before at the end of the 2019. So little upside potential yet. Be very cautious trying to sell into this yet, unless you see the U.S. dollar bulls really start to rage. Now let's take a look at a very interesting setup that we have going on. The Japanese yen, the U.S. dollar, Japanese yen. Let's do it in the other way, the reverse way, the one that everyone's familiar with. Okay, we have the US dollar Japanese yen chart coming up here, and there we go. All right, we still have a little bit of room for our downside target. We had made a higher move high with a lower move low. Now we have successfully planted in a lower move low, or a high, excuse me. So the question is, what are we doing? But this is a lower move high on the grand scheme if you take this last big high here to this low. As far as this current corrective move up, if you want to say it's a corrective move or whatever, bull run, we've made a higher move high, higher move low, higher move high, higher move low, higher move high, and right now we currently are making a higher move low. So I think it really is a key question is how much support will we get? This level is critical, the bottom part of this target zone. If we fall below here, then that really confirms a neutral to lower trend for the US dollar, Japanese yen, and I would be very leery of catching any big, sustaining any true rallies after that point for a while. Now, we do bottom here, and we get a nice little turn back towards that resistance, then you might have to be very leery of how the bears are going to really keep this market down, because I think if we can find a good support base here, and especially if we rally it back up to this 110, 111 area as we start to hover near these highs will become in jeopardy. I mean, we still have a longer term outlook of this market hitting 112.5 to 113 even over the next few weeks. So this one's a tough one. Whereas we're still a little bearish on the Australian dollar, US dollar, this is one where I think that the US dollar might, for this area of the world, might start to gain some strength much earlier than the other currencies. I think Australia is going to be much more reflective of what goes on with China. So now let's go to US dollar CHF. Let's go look at the Swiss. The Swiss is always a flight to quality currency, just like the yen is and the dollar is. Lately, it's been under pressure until this week. This week, the Swiss bulls came back with a vengeance. You can see that we set that higher move high. We failed at just above 99 cents there. Parity just seems to always be out of grasp for the US dollar Swiss. Or is this just a profit-taking move before we make a nice little rally back to the upside? Who knows? We had been, if you look at it right here, we're in a bear market. However, we made a series of lower move highs, lower move lows. Now we made a higher move high. So we made a lower move low and a higher move high. So we could be set for sideways. We have entered our target zone for the US dollar Swiss. So as far as can we buy, is this bottoming? Well, it may not. We don't know. But we've already hit this part. So it wouldn't be very surprising to me to see the consolidation trade develop tomorrow. We may still poke a little bit lower. I'm not saying that we've bottomed, but I think we're going to start to see a little bit of a consolidation and possibly another run up for dollar Swiss. Now, should the US dollar become a very big bear? Well, that changes everything. Now, the thing is, the EU is falling apart at the seams right now with this coronavirus. They are still spiking. They are not flattening out yet. So they have a lot of issues there. So with that, I think it's going to be really tough for any currency in Europe to maintain their strength versus the dollar. I could be wrong unless the world views America as really falling down apart. Now, the numbers in America have been spiking and have been still going up at a very rapid rate. We still are probably a week or two behind the curve in certain parts of our own country, ahead of the curve in some other parts of the country. So it's a tough juggling act. So we'll see how this goes. But if the world perceives things as being very bad in the U.S., I mean, now we're just waiting on the Fed to keep on doing what they're doing. This package just got passed on Friday by the U.S. government, so we don't know what impact it's going to have on the U.S. dollar, but there's a lot of rumblings about the credit markets, how shaky they might become, and remember that interest rates are a function of currencies, so no matter what, it will have an impact on the currency markets. We will see how these things pan out. Now let's look at the British pound U.S. dollar. Now the U.S. dollar index has been getting crushed just basically because of the big run-up in the euro as well as in the pound. As you can see, look at this pound. You want to talk about volatility. I mean, this market, look at this. We topped out in the middle of December. We were up here just short of $1.36. We got all the way down to $1.14, and now here we're back at $1.24. I mean, this volatility is just absurd. And now we are just falling short of the target zone. Actually, we had just poked through it, on Friday's session. So is this going to run out of gas? Well, overall, this is lower move lows and lower move highs. So I guess you're going to have to say this is definitely a bear market right now. So unless we really get a big rally and we get back up into this pressuring resistance up above $1.32, this market is a bear market where this is a corrective rally that we're viewing it as. The UK is also exploding now with the coronavirus. Not as bad as some countries, but we don't know where in the curve they are right now. If it starts to flatten out and stabilize and things seem to balance out, well, then that'll be a good thing. We're hoping that everywhere in the world it starts to flatten out and cases and numbers continue to drop and go down. We do not, it's a horrible thing what's going on, but it is making these markets surge. So as far as this rally, I think that this has been partially profit-taking and waiting on the U.S. to get their package. The U.S. has gotten their package. Ironically of all, we were hitting these points right almost all simultaneously in these currencies. So that's something to really take into account, is that if all of these markets have been correcting and been one way now for the past week, especially because of the dollar, a lot of things have happened. The Fed is buying every day. We have the new package that was passed by the U.S. government, the bailout, coronavirus $2 trillion bailout package. These things are now done. So we'll see. Everyone's debating about it, talking about it today. We'll see what kind of reaction the markets have when they open up, and see how Europe and Asia start when they come online. So we have this market that is, like I said, it just touched into its target zone. And now let's look at the biggest component of the dollar index, the Euro US dollar currency cross. This one is hit well inside its target zone. It is falling just shy of the upper extreme of this. Is this market going to keep on railing? Well, who knows? It could. It can go all the way up to $1.20 for all we know. This volatility, we've seen more volatility in the last month and a half in the Euro US dollar than we have in like a year and a half, to be quite honest with you. We've seen bigger ranges in just like any couple days over the past month and a half than we've seen in any period of weeks or months over the past year and a half. So what does that mean? Well, it means we have a lot of swinging going on. Right now, currently, this market is a bull, but it's hit into its target zone. So now we're expecting, if the dollar is going to turn around now because of all these events that have come to fruition. Remember, we have unemployment claims coming out for the United States on Thursday. We know without a doubt they're going to be high. Is it going to be as high as the number that we saw last week and make another record? Hopefully not, but we will see. Most likely, it is going to raise unemployment again. I mean, well, if we were to see normal claims, that would be a shocker to everyone, and definitely a wonderful sign. But we'll see. Right now, we're all expecting a higher jump. Now, remember, Unemployment is a lagging indicator too, so don't just as we get the unemployment claims higher once again this week, they will be much higher than usual. Then that's expected. As far as the actual unemployment number on Friday, this will not be as reflective as the next number. The next number is the one where we will see unemployment start to spike higher, like as for the actual number. Right now we have the claims. Claims are just filed. It's all new. And then we also know that there's some people that have filed and now they're going back to work already right away. So, and not in big capacities, but there are some bailouts that are happening, and there's some people that are being already called back to work, especially in some essential services for contractors and things like that. And hopefully people who are, we still need it. We just had a monster storm come through Illinois over the past 2 days with the waters rising and stuff like that. So definitely don't want people losing power when they're stuck at home right now. And definitely with the storms too, someone's got to take care of what happens, the aftermath of those too. So thank you to all the first responders out there and everyone that's hanging tough and helping all of us stay safe and stay healthy. And definitely please, everybody, listen to the governments and the doctors and keep your social distancing and try and stay at home as much as possible and weather the storm as best as you can. No matter what, we are going to get through this. This is not the Black Plague. It is a war. It's a war against the environment, and right now Mother Nature is kicking everybody's butt around. But this will pass. We will survive, and we will move forward, and hopefully with fewer lives lost than some people are expecting and preaching about. So with that being said, we had some signals that we talked about, and we're looking for some new ones. And this is the other thing too, is remember I told you at the beginning of this video to read the book High Probable Japanese Candlestick Patterns? Well, it's very likely that we're going to see some signals go off in the next few sessions, because typically when we have markets that are diverging or in tandem like they are doing right now with such force and volatility and volume, then this is usually ripe for some of these signals to occur, which then helps us to figure out if these current moves are corrective moves or if they are the beginning of bigger legs higher. So we'll see. Only time will tell. And also real quick, just to see, if you want to see, we are long the Euro US dollar, we are short the US dollar Swiss, and we are short the US dollar Canada. We had trades on earlier in the week. We had a rough week last week. We had some winners, we had some losers. The volatility was just nuts, especially from the opening range from Sunday and from last Friday into last Monday. So, but we are still swimming and doing well. So you can check out our signals. Just go to www.forex-trading-unlocked.com. You go to our website up here. You go to the top menu bar, and then you can see where our product, courses, and services are. We have Forex signals. You have also trading courses, mentoring, and Forex Trading Unlocked Market Center coming up. But yes, for the Forex signals right here, you click on this link here, and this gives you a little bit of information about, if this would load up, there we go. So this pulls up some information about our signals and blah, 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 and it also tells you how you can sign up for them also here. So just take a look at this, and right here you see the icon, subscribe. That's the way you can track our signals. Forex Trading Unlocked obviously is the signal system for that is being right now offered on MQL5. So you can broker connect with your own brokers. We have nothing to do with it. We don't touch money. All you do is just tag orders along ours and just follow it along and do it at whatever level you want. We are developing some new rules and some things that are going to go along with the signal system for our followers to help them along, and that you can find out that information as we continue to release it on the MQL5. And you just click the Forex Trading Unlocked right there on that little spot, and when you do that, it loads up the MQL5, which then brings up our stats for our signal system. It tells you all about the positions that are currently on. Please do not try and mimic these trades. You do not know when we are altering the stops or our targets or getting in and out. That's why you have to be following the signal system, because it does it all for you. We are always doing these videos in delay, and right now it's the weekend. It's still the weekend, so the markets are closed. So we don't know what's going to happen and what we're going to do when they do open. We may get out of these trades right off the bat. We don't know yet. We have to see how things open. But as you can see our results, track all kinds of other things, what's going on with it. Always remember Forex-Trading-Unlocked.com. That's the place to go every day for your Forex needs. And then please read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback version. With that, I want to thank you very much, and good luck with your trading, and we'll see what happens with the markets in a couple hours. All right? Take care. You have a good day.